Good afternoon. Coming to you from Traders Community. Quite an eventful day today, particularly if you're an oil and gas trader. Massive moves. Again, natural gas up about 50 cents since we broke that level down at 380. It's been a one-way train. Oil, been pretty much a one-way too, but not as dramatic. As far as the stock market goes, we had a pretty solid day. In fact, you could argue a very solid day, given that we had crazy high inflation numbers. These are the highest numbers since 82, I think, but basically 40 years, 7% annual inflation. The target was 2%, half a percent on the month. A lot of it, yes, it is transitory in the sense it's from supply constraints and all that. But at the end of the day, we're still spending that kind of money, right? So that, we also had a 10-year auction, which I gave a C on it. Some of the major banks, the Goldies and people like that, went even more bearish, C minus. A lot, primarily because the indirects were low, meaning internationals didn't take it up. Also, there's probably people hanging back, thinking they could get higher yields, given it was 1.81 tomorrow. So that's worth keeping in mind, you know. Little things like that. Obviously, if you're going to invest in that stuff, from an investor's point of view, they look at the yield. Higher yield gives them a better protection. Okay, on the S&P, 10 out of 11 of the sectors were up today, did close in positive territory. The only one up over 1% was materials, which has a lighter weight than others. The only one down today was the healthcare sector, down minus 0.3%. And that, I'm guessing, Madavi, was probably because of Biogen getting destroyed, you know, after they didn't get through that, because that's got to be a big weighting. I can't say I've looked at it, but it was down $16 or 6.7%. It finished at 225. That was the one we traded yesterday around 218, I think. So that was because, remember, Medicare officials proposed to limit coverage of the company's Alzheimer's treatment unless they participated in an approved clinical trial. So that's what hurt that. The other thing out today that is irrelevant to the bond market and therefore the stock market, the Treasury Budget showed a $21.3 billion deficit in December. But think about this time last year was $143.6 billion for the same December last year. But don't let that fool you. That was all to do with when they started accounting for all those payouts and PPPs and all that stuff from the coronavirus. So you can't really compare it to that because it's not an annual seasonal thing. So it was also the 27th consecutive month that the Treasury has seen a budget deficit. So when your mum tells you to save, don't... she's not taking heed from the government. So it's now $2.58 trillion, that deficit. Pretty decent number, right? The other thing that was out, mortgage applications, well, 1.4%, and that was down 5.6% the previous week. I think that's been down for a few weeks. And we're going to talk about oil and gas more in depth, but we did have the EIA report today. So after today, all the indexes are still down. Dow Jones is down just 0.1. S&P down 0.8. The other two, the Nasdaq, are the real losers, down 2.9 for the Nasdaq, 3.9 for the Russell. Russell was a pretty pathetic effort today. It opened up strong, just gave it up and finished down the weakest of the lot. As far as that pretty well covers that before we look at charts. Anything else you can think before we look at charts? Other than Donnie had a big run today, which I remember you did pretty well on, Madavi. the DWAC. And let's go through the charts then, shall we? So on the S&P weekly, we finished up here at 47.30. We're looking at cash, remember? So you can see that potentially this can be a powerful ABC after it held all that. There's a lot of room above here. But again, we need work here to get that going. You saw today it opened up well and it pretty well sold off. Not aggressively, but enough as we get to vol to get really sold off. Here's daily. And you can see the same picture. We're trying to get up to plus 1/8. We are not over this high here. So I mentioned this morning, from a bearish point of view, you'd want a lot of talk about this part of it being a head and shoulders. This ideally should always be higher. The right should be higher than the left. Doesn't have to be, but it gives you a better feel of it. We're way over that tanking. If we go to the 60-minute, might help if I... Give me 1 second here. So if we go to the 60-minute here, we can see it actually traded really nicely since here. So today we opened up, and as you can see, it came down. Actually, I think Spurs got negative. I remember it being negative. We got to 7/8. So not a classic sell sign other than the the Chicow up here, and pure order flow. The selling came in. We held nicely independent. We wicked around here. So what I'm looking for now for our next direction, the Cajun to go through the tanking to get it up here to 8/8 would be a good situation, or higher. However, if the tanking comes back through the Cajun, you got the it means this has failed and we need more work, right? So if we look at this 1, 2, 3, right? So this is a 4 perhaps building. That'll tell us if it goes higher. Otherwise, you got to look at this being 1, 2, and more room down here. If that's clear. The Dow, just nothing really, just pumping its way up. Remember, it wasn't the weakest out of them. If we look at the Nasdaq, let's look at the Nasdaq 60 first. It just pushed up all day with a couple of little sell-offs. Any thoughts on the Nasdaq today, Madabi? Let me go to a 30-minute chart. Let me see. Are you with us still, Madabi, or not?
We stepped away for a minute.
Oh, okay. So we'll come back to that Nasdaq. I'll look at this as a daily. On a daily basis, you can see what had happened. We got back into that cloud, and we closed right at the Cajun. So you would have wanted it to, because you're really looking at strength. But we'll look at this powerful 1, 2, 3, 1, 2, 3. So nice stuff if we can get a leg. What I noticed more than anything was vol really came off today against the VIX, the VXN, or across the board, right? So you could have been long calls and lost money today coming into it. So two factors for that. One, you could argue first up there's no fear. And yes, the skew, as we all know, is towards the put. But the nature of it and the volume of the puts told me more that there's still, and just the chatter, which I look for sentiment, is very much bearish. It tells me there's a lot of puts still in hand. That gets interesting if we start moving higher. So keep an eye on that. If we look at Apple, which is one we look at, that's stalled out today, but look, it's still just drifting up. And so if vol's getting whacked, then these puts are losing value. Now, one thing I want you to look at on Apple here, let me just do a line here. Probably not a good trader's joke. But if we look at this, and remember there's a lot of wicks. So if this is a reverse head and shoulders, or a cup and handle, say, but if it's a pure reverse head and shoulders, your target becomes, you take the head, which is 168, give or take, to the neck, which is 174. So if we were to take that, that's $6, right? So that puts us up here at 180 potentially, which would be short of 7/8 and just above that twist. So that's little things you can look at. The bear, so that would be your bull argument. Your bear argument is, again, let's do a few lines, would be this wedge here, the old wedge. Okay, so keep an eye on that. You got your support. Tankin is proved really well here, outside of that wick. So nicely there. Pretty simple stuff, right? Okay, let's look at some of the stocks. We've seen, so something with the daily data doesn't seem to be correct on that RK. So we can see, I want to go to, on these arcs, on the 2 hours, or the hour, Johnny. So what you saw on ARC yesterday, all these things were up yesterday. First time since Adam was a boy on some of these. Seems appropriate for the ARC, right?
Yeah.
We totally reversed today. This is RK. So we opened up another strong session, right? Another strong session. It seemed to be, and it just gave it all back. And you saw this in the Russell and everything. But look at how much it came back. Quite a dramatic move in an up day. So clearly people have given up the ghost on some of these stocks. This is RK. Either getting short, getting rid of their investment, but that's, if I'm an RK guy, I'm pretty disappointed. If we go to ARKG, we're going to look at an hourly. Look at this. This one didn't even. Same thing, got up. At least it's finished up today, Johnny. Saying it's up like 9 cents or something. But this gave up $3 from its high. So it looks like the dribblers all got in here and bought it up. Oh, and the big boys just said, or whichever fund just gave it. And there was no follow-through buying other than the dribblers. That's what it looks like to me. Here we are on the hourly VIX. And look at this. So this is what I was talking about. This is a height of it's the end of the world. And then we gave it back on the first rally. And then today, open with a little bit of vol recovery. Well, that was at the end of yesterday, sorry. But we sold out of the gate. We're back into these levels down here. Right? So, so we didn't even get to these levels, and yet the bearish noise is pretty loud. But obviously, and what's in it, it's just a strange dichotomy. If we didn't have all these puts still on, it should be telling us a different thing. But they are on. So, as far as Amazon today, let's look at hourly. So Amazon on the day was actually down, which is interesting what's hurting. If you notice what's going on, if there's anything specific there, I'm not sure. But we finished down on the day after being up pretty decent here. Like this thing's fallen like looks like $40 off the high. The chips, we'll look at the SMHs here, which is the one of the semiconductors hold. That's up 50 cents, not far off its high actually. So again, they're getting out of more. So Amazon's a little bit different. There could be specific reasons for that. I can't say I follow it. Just looking at it technically. But you're seeing the more speculative stuff. The biotechs also, don't forget, that was the only sector down, was the health. You had the Biogen. That all flew onto it. But so the semi-side of tech is up. So it pretty well tells you the other sectors, information, software, there could be some big players skew there. We look at NVIDIA. NVIDIA was actually down, just 50 cents, but still it's down, despite all the SOX indexes being up. We went through the tilt, I believe, and you can see that, and that's your interest rates. And then this has been the beast, and this has been our biggest call of probably the year. We were very bullish oil and gas over the year and over the stocks. There were some hurdles in here. So a lot of us got shaken out and some of our holdings got shaken out. But look where we are, 63.20. And this is a fundamental and technical play. I get it. A lot of people won't buy fossil fuels. They don't want to be if you're a fund manager in New York, you don't want to be at your little cocktail party and talk about fossil fuels. Well, or even be in it. A lot of hedge funds are shamed out of it, right? Whatever it may be. But let's be realistic. You still need oil. You still need gas. These companies are slim now because no one would give them money. They had to cut production. And I see comments all the time. Oh, why aren't they increasing production? It's all them. Even from the President of the United States says stuff like this. Well, you need money to do that. You need the ability to do it. You're talking about a country that wanted to shut down all new oil and gas exploration in the United States on federal land. Just think about that. Be fortunate that Texas is state, I would think, from that point of view. Yes, it's been so. That's the intention. We shut down pipelines, all this sort of stuff, and it doesn't matter what your politics are. You got to look at what affects markets. We're talking about this as a trading and investment point of view. Or we're getting up into overbought territory, though, so keep that in mind. 8/8 plus 1/8, but you got companies that are quality with good dividends. And I would hazard a guess that there's been a lot of big shorts on these companies, right? That's probably out there. So that's your XLE. Let's have a quick look before we really get into energy. On commodities, we looked at this quickly. Oil is stuck in this channel here. This is a weekly chart. Sorry, did I say oil? I meant to say gold. Sorry, my bad. Got black gold on my head. Here's copper. Moving up nicely on the week. It got down to that cloud. And we got problems in storage with that one as well. Off the Cajun right there. I don't think we need to spend... actually, we had the WSD report today. So let's look what happened on some of these. So soybeans. Let's look at an hourly chart on soybeans. So an hourly today. Let's go across... It looks kind of cool the way it does it. So this was your WASD report. Remember your crop reports? We've all seen trading places, right? And that's kind of real. In the sense of the craziness. Look at this one day today, Johnny. That's the WSDA report. That bar's 1368 to 1399. We closed up near the highs. So that's beans. If we look at corn, we'll look at that on an hourly too to see how that reacted today. And you can see beans, again, this is corn, opposite. So obviously there's reasons to do this with SARB's crop reports, right? But look at this, very big movements in something, so they can be pretty violent. So this actually got all the way up here and finished in the middle of the range, down a tad. Okay. So let's get on real quick look at let's have a look at the almighty Bitcoin. Strong day for it today, Johnny. Up $1,000.
Yeah, it broke to the upside, which is fortunate. We have an uptrend right now where it's heading upward, but there's a lot of fear still. And I was doing some research, and a lot of people have overlooked the fact that there's also Grayscale, the ETF, right. GGS. So they've had, if you were to pull up the chart for Bitcoin, you'd see that we're forming some support heading on an uptrend. But when you take into account the chart on Grayscale, this could be a very bearish downward trend.
Hang on. Grayscale on Bitcoin?
Yeah, so...
Enlighten me what you mean now. I'm not sure what you mean.
It's ATSB, Grayscale, but it's a ETF,
Give me the symbol. Let's see if we have it.
A GTSB.
Okay.
Yeah. So it gives investors exposure to Bitcoin without having to buy Bitcoin. So they've been expanding and bringing in Ethereum. They're trying to bring in some other tokens and some names that are going to help their fund. But the main one right now is, they call it Grayscale Bitcoin, and they
It says we don't have what exchange is that on? We don't have that data. So
here, give me 1 second here. It's GBTC.
oh,
So just like
totally different to what you said. Okay. BTC
is Bitcoin. So just G and then BTC.
Yeah.
Yeah, and the ETF has been around for probably about 2 years.
Okay, I didn't know about this one.
Started getting into the whole Bitcoin thing. I looked really closely at this. It's just that I felt I had more control and was kind of steered away from the ETF. But because a lot of the big institutions and hedge funds and investment houses, they don't allow their employees to buy or hold or put their clients in any kind of cryptocurrency. This was created to help remedy this. As a matter of fact, I found out more about it because they play commercials all the time on CNBC. So Grayscale's been doing a lot of things to innovate, but since it's not spot, it skews the way that it's being bought and sold. And I was listening to one of the experts that I kind of work with. They put together this chart and showed how when you start layering in the volume and the holdings that they have and what's happening with their chart, so you can actually pull that up. And when you do a comparison, you can see that this can, instead of showing an upward trend, it can actually, taking it into account, start showing more of a downward trend.
Yeah, this is it mirror. I've got the chart up here. It mirrors a lot of Bitcoin, but you're right. It hasn't bounced back like Bitcoin is here.
If I had the access to pull that up, I would.
It's right here. I'm showing you right here.
Yeah.
GBTC, right? So yeah, you can see it. It did the same top up here as Bitcoin itself. So that's let's go back to daily, compete horses with courses. So here's the daily Bitcoin. It looks pretty similar to me, actually. I mean, it's weaker.
Yeah,
it's gone down harder. This is 54 to 28, so it's lost half its value. It's an ETF, so it might be the way they do the rolls. Like, that's the trouble with ETFs. So that's lost. It's certainly lost more, but. Well, you know what? This is 28,000 off its high. That's a lot of bloody money. For something that's meant to be safe, that's nearly half its value, right?
Yeah.
So this is Bitcoin. Bitcoin's down, half its value.
Right, Bitcoin. And then this on top of what's happening. People rotating out of the fund, just like an ARK fund, people are moving their money because they don't feel as safe as they thought. So
you're saying they got to sell Bitcoin because they're getting out of GBTC, so GBTC therefore has to sell the Bitcoin.
Right.
And whatever. So I'm assuming this is just Bitcoin given the name of the company, GBTC.
It was solely created to give investors exposure without having to actually buy it. That's all it is. So I'm going to try.
The only place that looks decent is on a weekly on Bitcoin. If it holds that spike as the cloud, and we looked at the hourly yesterday, it trapped a lot of people on this spike. But you can see a mirror image today. It ran up to like nearly 44.8, 44.7 something. Right here.
Oh.
So, and then we spiked back down. I mean, this is a violent little vehicle, actually.
It is, and I guess what I had learned by sharing more information. People are really looking about what kind of indicators are going to hit that 65. They want to see it go to, if you take the chart and you were to move it up and we break the levels we're at between 50, what is it? About 50 to 55,000, we should go to 60. So those levels are real important, but then once you take into account these new, there's also that what is it? BITQ. There's another one that's out there that does also the Bitcoin.
Well, I did that one, that big one. Was it BITO or something? BITO or
Yeah.
something? Yeah.
So when you start taking into all these things, in addition to what's happening, you can start moving things where it could be more bearish.
Well, the flip side is when those came on, that's why some of these things went up too. So, it's the same as ARK, right? I mean, part of the reason ARK went up is because people would buy into ARK, so then they'd have to buy the shares in those companies that are part of ARK. And so everyone's one way, and it's got to come down the other, and now we've got the same thing in Bitcoin. And so Bitcoin's one of those things, there's believers and non-believers. So the non-believers aren't ever going to buy it, or they might buy it, but it comes right down. So all the believers, some will stay in it, but if they got in on leverage, then that's the problem.
That level right at about, let's see here, where the red line is. Can't see my cursor, but it's right below where it's headed right now. It's forming a double top.
What are we talking about? GBTC or Bitcoin?
The chart that you have up right now. It's the GBTC.
Okay, let's go back to GBTC, yep.
And so if you go out a little bit further, you'll see...
On a weekly?
There you go, the double top. And then down here on the right.
Well, actually, let me just look at something real quick. So look at this. Here's what I want to show you. This is negative divergence. So this is Bitcoin itself. See how this high here is higher than this high?
Right.
See that? Now we go to this. Look what happened. We never got higher. That's really bearish for this instrument. Which is why you're saying this didn't even get to that height and it's meant to mirror image it. So
right.
let's look at this. So this is 56. It got to 54. Hang on, where was our weekly? So this was 60. This was 68. So this went another 4,000. That other one didn't even get within. It didn't even make that height. Yeah. It's not a good measure. There's a gap here to fill too. Hadn't quite filled yet. See that?
No.
Yeah, this isn't good.
So it's just an aspect of, I'm not a, 100% Bitcoin guy. I look at the entire market as far as crypto. I like a lot of tokens and a lot of things happening. But when it comes to information that you find out, I think the more you look at and you're aware of, you can kind of, plan your plays accordingly. You just want to be aware that this is happening right now with Grayscale, and because it is one of the larger holders of Bitcoin itself.
Yeah, I wouldn't mind betting if I looked at all of them, it would be pretty similar. So that was bearish stuff. Real bearish. Okay, let's get on. Thanks for that. Anything else on Bitcoin? Are we good? I guess going on the real world energy. My real world. Let's look at this, guys. Okay, we're going to look at make this look a little better for you. So interesting stuff. Thanks for that, Johnny. I had no idea about that thing. So let's look at the 5 minute. Well, we're just going to look at the charts first. So we're going to talk through a little bit of the fundamental stuff of what's going on. So today, just from a pure trading point of view, it's pretty easy. Oil opened up nice. This is our 240. You can see it open right here, and up already over S1 over the pivot, and we just continued up. We did a bit of work around the EIA number, and we managed to close above R1. We did a little jinky on R1, But look where we're closing this, 82.70. So to put that in, just real technical stuff there was pretty clinical. Tested, tanking. Here was your spit, and we just went up all day from that. There's a bit of price action here, but even this is, you had this volatility around the numbers, and that was it really. And you saw, we looked at that XLE, which is the ETF for oil and gas. That was up pretty dramatically, as you know. Nice. There we have it for that. Now, if we look at the weekly, look what we're doing, guys. See this, mate? Yeah. So this is when your boy, President Joe Biden, sold all that SPR out, if you remember that, everyone, because it was going to save everything, and Exxon managed to pick a lot of this up. I can't remember if they did it down here at 67, but thereabouts. Remember, these are so what the SPR is. It is the strategic reserve for the United States of America if you need oil. I hate to break the news, but we do need oil until we have a transition for energy sources. But we do need it until we find another way to make chemicals and plastics for that as well. So there is that demand. And as I mentioned, the United States, it's been a worldwide effort against fossil fuels. It's all nice in theory, but you can't just stop doing things overnight. I just read through something in Australia, like from the anti-movement there, which is, you just got to be sensible about all this instead of just antagonistic. And you know what? If you don't want oil and gas, do not use your heater if you're in Australia or America or one of these countries where it's really got, don't take advantage of the income, whatever. You need a transition with thought and have your good people on board instead of chaos, because what that does, it just puts sides against each other, which isn't what you want for something so dramatic. And as you're finding out in northeast of America right now, it's bloody freezing, right? And you're going to get it quite the bill when we go through natural gas. So we look at this, we've come up to the breakdown point. And I labelled this months ago as a 3 or 5. A 3 would mean this is a 4, and we are just starting up on a leg of a much higher leg. A 3 would mean, the 5 would be this is A, B, C. So this is big stuff up here at plus 2/8. And that would mean getting over this high of 84 plus to new high. So just keep an eye on that, right? And obviously if it gets higher, you get all that. This, whilst it's great for oil-producing countries like Texas, let's call them a country for the point of this, Johnny, Russia, Saudi Arabia, all those good guys. They're not all good guys, right? So and the reason I mention that is why geopolitical and good overseas policy is so critical to a country like the United States. Right, and so let's just think about this. You've attempted to retard or hold back U.S. oil production. We are still well off the heights, and we're just talking geopolitics here. We're not talking what's right or wrong for the environment. We're just talking about that picture. So
it's interesting, you hear from the oil and gas and the investment portion of that you're very familiar with. It's the same. My background was in semiconductors, so I see a lot of similarity. You've got the SIA, which is the Semiconductor Industry Association, and right now there's a lot of geopolitical stuff, as you know, because of us as the United States, not having the full control over manufacturing. We rely a lot on Taiwan, and that's of course playing into the China thing. So I see a lot of similarities with that, because there's also that USICA bill that they passed. USICA was the United States Innovation and Competitive Act. So that's playing into what's happening. For instance, today when I started, I got into AMAT because AMAT outperforms almost all of their competitors. which is good news, for they did well. ASML did good. I think it was a couple of others that did good, but the industry as a whole is looking for this. And you look at also what's going on with Intel. All these big companies are looking for some money to help build out the new infrastructure that's going to help them stay competitive. And that's playing into what's going on with the price points. And I was up in AMAT, and then I rotated out and went to NVIDIA, and NVIDIA didn't move much today. So
no, it actually finished down. I saw.
Yeah, so it's just very similar. You have to kind of know the landscape of what's going
Well, some
on.
good points you make there. And actually, there's a really good article on Traders Community. It's from last January, where the pit boss actually put it out. But he said way back in January last year, the problems with semiconductors, and it was self-made. Don't kid yourself, people. That this is all to do with the coronavirus. There's a reason some countries are doing good, some companies are doing good. Nvidia's doing great, right? Intel's not, for example. But way back then, so what had happened? If you go back 5 or 6 years, chips was a glut. Companies were doing bad on them. They chose not to reinvest in them, predominantly in the United States, around the world, not just here, but Taiwan made a decision back then to back their chips, their foundries, predominantly Taiwan Semi, TMC, UMC, all these companies. And because what would happen, these car companies, Ford, GM, Volkswagen, Toyota, had all because it's such a big part of chips, they basically threatened these guys. This is what we're going to pay. And They would have to accept it, right? So Taiwan said, bugger you. This is what you're going to pay. The car companies, we ain't going to pay that. So they had basically screwed these guys down for years. And if you recall, when your President Biden got in, they played his card. Oh, this is all because of these evildoers overseas. And he got wound in. Yeah, we got to do this. This was all they're doing. This is shocking management from these car companies on one hand, but also from the US, and not all of them. Texas Instruments, for example, they stayed invested. Then there's a lot of new ones that have just come along. And NVIDIA, obviously, right?
Yeah, that we both like is AMD. So good.
Yeah, AMD's another one. Took advantage of Intel. And actually, I'll give a shout out to Elon Musk on this. He recognized this problem. So he brought a lot of this in-house, or did deals elsewhere. And the second part of that EV argument is the
chips.
Not just the chips, no, the commodities that you need for them, like nickel, lithium, some of the rare earths. Musk also went out and did deals directly with companies like BHP and said, we'll buy this off you, and tied it in. So it's not all the virus, right? It's also shocking, man. It's a great cover. And now if you got everyone buying into it, so now it's just a mess around the world.
And you got to delay the truck too, about a year.
Yes, so right now I go into a car.
You know that, right? That truck.
Car line.
Yeah, but he's keeping his cars going. So he's ahead of the curve with all that, right? But yeah, you're saying because of that, so to make sure he does his cars,
So I was reading an article where they were profitable. They had more sales last year during the shortage than any other automobile manufacturer. And the reason why is because when they program their chips, they do it. They don't subcontract. So
yeah, 100%. That's what I'm saying. Yeah, 100%.
And that's really worked in their favor. And AMD, it's another thing. They stayed, competitive and innovative. And now they just signed a deal with AWS. So there was news on that earlier today. So I was watching for that to run up, and it didn't run. It moved a little bit.
I think what you're getting is a lot of people got buried on this move down from last week. And so you saw, for example, the Russell was strong and just gave it up. And you saw certain stocks just give it up. I think and when we look at those ARC things, I think you got a lot of selling And if I think you were listening to CNBC today, every bloke that came on was, I'm selling around, this is all crap, we're going to zero. So there was obviously averaging selling, there was people getting out of bad positions. I think that's what's going on as well, And obviously, to me, the energy space, I'm seeing 52 high. They still don't want to tell you to buy it because, hey, man, you can't buy fossil fuels. It's killing us, So you're getting that going on, but there's probably shorts going on. But the big difference if we back to that chip story, Taiwan just said, so they took it on and they're finally making money out. And they're the powerhouse of the world by a long way, right?
And you'll be
semiconductors, huh?
Another charging a premium.
You got to be selective. It's not like before where any kind of news just drove up these fan favorites, right?
Right, 100%, mate. Very good point. And so out of the chip sector, it's the quality chips, right? The ones that have niches, like ON's another good one. NVIDIA. Look, a lot of them got overbought. Just because they're a good company, you still got to look at the value of the share, right? So
it didn't matter back then.
No. And I give you the tip. You're seeing the same thing in oil and gas now. They're buying some absolute dogs up as if they're quality because it's the same thing. And if you're not familiar with it, right?
Well, I was looking at you and I said that's just like the semiconductor business. What's going on? The geopolitical BS that they have to work through.
Well, you didn't really get the geopolitical So what hurt chips was the price went down to the glut, and other than Taiwan and a handful of companies, which are all doing well now, like you pointed out, that German company, Infineon, I think, and the Dutch one is ASML, or it could be one, whatever. But those two countries, they backed them too. Good decisions. The difference is with oil and gas, they shamed the world with climate change and all this, and you're evil and all that, because the ignorance. Oil is used in so many things, and yet, if they were so fair dinkum or real about that, that's some Australian for you. What about coal? What about this? What about proper planning? It was just, but they know with social media they can create an illusion of what's true and not, get the backup. And there's so many people on social welfare and that shouldn't be, unfortunately, that aren't as cognizant of certain costs, And I don't get me wrong. I'm not saying you shouldn't be on that if you're on it. What I mean is, it's probably not the right word, that are beholden to the man sort of thing. So you got that in the background, and it meant we haven't produced oil and gas. Just think about it. We got the half the world now in shutdown and lockdown. So there's no way there's the amount of oil and gas demand, is what you'd think. But just think about this. Think how much plastic was used with all the PPE stuff, right? That didn't go away. Gasoline hasn't gone away. Cars are more efficient, but people still need to drive. And a lot more people are driving now because they don't want to share a train or a bus and things like that, right? So there's all these unexpected consequences. What's left us with this shocking stuff, and the answer from the United States is to accuse oil companies of gouging and all this sort of stuff. I mean, but their partisan people buy into it. And it goes the other way too. Back when, I remember when Trump first got in, we don't, there's an old joke, they're going to turn off the scrubbers, which is a thing to clean coal. But, I've never seen such shocking, in the world that's meant to be educated and enlightened, just unbelievable, the ignorance out there. And people are paying the price for it, right? So
my father was an electrician, and I was married back in April. And thank you for the, congratulations on that. You're supposed to say congratulations. No, so I saw he came to the wedding, and his big complaint was, as an electrician, he can't even buy the plastic covers to the sockets,
Yeah. I still got a bunch of them when we remodeled. I should flog them.
Never into supply chain and all this political. Now he's plugged in because now it's affecting his business and all his materials. And play that forward, you have people that aren't doing the manufacturing, and it's just the slow pace of which everything is moving right now. It's just it's a bigger problem than you could even imagine, especially if you see all the boats, in Long Beach that can't.
Oh, yeah. I thought that was going to be fixed up. See, here's the other thing you got to understand about politicians. And I don't care what bloody persuasion they are. They just say things and hope it happens. But they won't even listen. So they don't. So what's happened in not just America but everywhere, they don't appoint good people to good positions that know what they're doing. So back in the day, you probably could appoint a transport. I guess they'd come under transport, right?
Yeah.
Or someone who would know how to deal with unions, know to do this. But they still just, if it is union safety, whatever it is that's holding it up, obviously it's not being done. But all the noise from the politicians all it's doing is dividing America more and more politically and domestically, because they just say things and they believe it if they're that side. And so that's a great example with the ports, because they got on and said, we're going to fix this. Well, you can't just click your fingers and it's fixed. And these are real situations. But the average man is just, all they go on about in the United States is the January 6th thing when Trump was in, right? Well, whether that's right or wrong isn't the point. It's a total distraction from everything else. And don't think that's not intentional. And the supply lines, it's a very good point,
Yeah. And it is going to affect everybody and the cost of what we're paying for things. So once it starts affecting your life, then all of a sudden you pay attention to it.
Well, you'd think they'd be doing that with energy. But here's another factor. Just say that you're a small business, mate. We all of us three went into business. And our business relied on an import. And it was doing great, and we had a good crowd, good market. So we had a good crowd in the whatever it was. All of a sudden, we can't get it. People might realise that's not a necessity anymore, or might move on. There's so many unintended consequences from all this stuff. Some of it's good, some of it's bad, but unintentional, and so who knows? When people tell me this is going to happen, that's going to happen, I'm like, really? How do you know that, right?
So to your point about politicians, and it's hilarious when they're now trying to regulate or oversee the crypto world and that. And I don't want to bring this up, but it's funny because they have a bunch of politicians that don't know one thing about it, asking the most ridiculous questions, but they're gonna be the ones that make decisions. And it's just like people that don't have any experience in energy. They don't know anything about how we need the resources and how we need to use them and how we need to make them move. So it's the same thing. It's almost like these politicians just want to have that power. And not really.
Oh, it's all about power, mate. Well, to that point, when we watched, I think we all commented on this yesterday, when we watched Jerome Powell at his Senate thing, you looked at some of the questions. They were just ignorant at best, or partisan bias with no relevance to the situation America's in right now. Not just America, the world, right? So that's something is a little bit easy to understand. You'd think, right? Banking, money, inflation. So these same people are now all of a sudden, as you said, experts on something that we all struggle to fully understand, and we're in the markets and we're into technology, So just imagine. And they're making decisions. It's mind-boggling, right? The same thing comes to renewable energy. They don't understand traditional energy, but somehow all of a sudden they're experts on renewable, which we're still working out, right? But And you need so much energy just for renewable energies, for EV, traditional energy. You need the plastics from oil. You need you need to create your oil. You've got your energy through. There isn't enough you can get from wind or from solar, and that doesn't work all the time. And then it's just, to me, it's mind-boggling. and almost embarrassing to be a human right now. I wish I was one of my dogs sometimes, I'm like, how are we at this point? We're educated. But,
And the disasters that are created, like, when the Valdez, all these are man-made
errors. That was a drunken skipper, that one. Yeah.
And then you got the nuclear power plants that, Chernobyl, for instance, they didn't even know what they were doing. They ran the wrong drill to test the core. But all these things were human error. They weren't the, fault of what the whatever it is, gas would be the gas, or, like natural gas or oil. These things, they can be used right and efficiently and work alongside with everything without having to be hated on, as long as it's not killing people.
I think G's snoring in the background there.
So that's the dog.
Yeah. So yeah, that's what I mean, G. Talking about natural gas. So let's look at that. We had a good look at oil. So we've been talking about this all week. We didn't want anyone to get long this till we knew which way it went. And then you get paid. That's the way you trade a commodity. This was your buy signal, the false break. If you were aggressive, the second one was here. But look at this move, right? And I'm pleased to see we marked this, months ago, of what it can be. So the whole point of Nova Wave is to get you thinking and not react, be proactive and know what's going on. We knew the fundamentals. A lot of people didn't know why. They just knew it was cold. They didn't know it was domestic. And so all that happened. What affects this is LNG and weather, right? Pretty simple. LNG being our exports to Europe. We got way ahead of ourselves up here. The punters and dribblers got into it. They got pounded here, and then this goes on. So that's your weekly. Remember, we go through these pretty consistently. And so hopefully people are benefiting from that, and you're sharing around this podcast, peeps. It's kind of valuable. And so here is a daily. You can see this is a diamond pattern. You see this often at the top or bottom of markets. It's kind of famous in stock markets. Some of the big, in a big bull runs have had this sort of thing. But look what we did here. It got to 1/8, right? Off plus 1/8. So it was already oversold. And we knew our downside potential was here if it broke down. But once it got through here, remember that gap up? It filled the gap. On that Monday, gave you a beautiful trade. And then we've just rocketed up. So this is natty. I mean, it's but this is not for the faint-hearted, right? This will move around on weather reports. So it's one that, let's just look at, where's my two? I have to put in, because I wanted to go back to those in a minute. I think it's N gas on here. So yeah, this is one that even when you know it, you can get buried on it, right? It can be dangerous. So here's our pivots. Look at this. This is just today. But this is how high it got, and I wanted to show you this. So we open a minus 2.8. Well, remember, I've got it set and recalculate. So we minus 2.8 to plus 2.8 in this session, and this is today's session. It's 50 today, right? But look at that, right to plus 2.8 over Chico. See how good that works, Johnny? These lines look messy. You just want to look at today's R3. So people made the mistake who don't quite understand pivots. Oh, it's a guaranteed sale. No, it's not. You sold at R3 here at 450. This thing went to 490. Almost 490. Remember, these are big points. Natty points are big points. These are worth a lot more than stock market stuff. So keep all that in mind, but learn your pivots, your Murray, all that stuff. But that was a very big move. This is fueled by short covering and speculators. People need to get the molecules, as they call it. And remember, this is Sabine. This is Henry Hub. So if you're looking at the area where they're really cold, and I don't have the charts on this, New York, etc., this is a lot more brutal story, as you've seen in Holland and those well-known ones. So yeah, that's in cold weather. And yeah, it's a little bit, so obviously part of it's the transition stuff, but also natural gas, you can only store so much. It's a little bit different to oil. But production is down. And part of that's because of the weather. So, I mean, that's the real world, right? Freezing cold. I guess I could make it. So that's pretty well that on that. So tomorrow is the EIA report. So on on Trades Community, we do a good, two of our most popular series around a barrel for oil. So we'll go through that real quick. And then into the vortex on natural gas. So we're very fortunate. We have a lot of big contributors that can put us a lot of all these wonderful charts of what's going on. I would suggest if you're an investor, you should definitely be familiar with this. If you're a trader, even more so, right? Today, the US crude stocks were the lowest since October 2018. Think about that. The lowest stocks were at $82, and our production is down, right? Production was down another 100, and we all know the reasons. And some of them are justified, some of them aren't. But that's from it. So today, and then you got Kazakhstan, Libya. These are hotspots. They produce oil. They have issues. There is the Omicron on the other side, right? Parts of the world shutting down, but that's a diachronic situation. Some countries are shutting down, some aren't. But as I said, you got this massive demand for plastic, which Johnny just mentioned, that his electrician mate can't even get a plastic cover because they're using it for the PPE. I mean, that's the real world, right? So yeah, do yourself a favor, go through this. You got everything here, DOE, the API, Cushing, which you need to familiar with if you trade WTI. That's the hub. You can see imports, exports, gasoline, the rigs, and it's just a really good report, DCOT. And we do have on here the technical analysis report, which is updated every week. So you plan in advance, right, of what's going on. You know your levels, and then you'll get familiar. So if we come here, look where we are in the bigger picture, guys. So this is 2015. Let's hope we don't get up here again. But this is $100. We ain't that far away, are we? You know? This is when it got down to zero. It actually went to... The month that's not on here that was expiring got down to minus 41 or minus 38. I can't really remember, but point is, and that was the end of oil. Remember that? Everyone was telling us, no, we weren't going to use oil anymore.
Been happening for a long time.
I mean, so how are we going to do all those things we just talked about?
Right.
But yeah, so anyway, lots of good, and some of these guys are going to come on in separate interviews, and we're going to go through this more in depth, but understand your optionality and stuff like that. So this is oil when we all went, look what Vol got to back there, 600%.
I think it's important to say, don't trade something unless you know it.
Yeah, 100%. That's what we have. The whole idea of Trades Community originally, and still is to share stuff that we think's relevant that will help you, that you mightn't get elsewhere. Or you might have to just pay way too much money, and we try to subsidise all that. Don't know why, but there's some ads there. So here we have natural gas for tomorrow, right? So right now we're looking at 166 is still a consensus. It may be higher now, actually, but that's the draw of molecules of BCF coming out. So last week were 31. This is how cold it's been. 166 this past week. And it's even colder this week. So that's out tomorrow. The market will react to that. And you can go through here. You can see a good report on all the storage. As I said, really good contributors there again. So we're grateful for that. But yeah, do yourself a favor and get familiar with those two reports. What was that, mate?
What would you recommend for somebody that's not really traded oil and gas? What would you recommend as far as a starting point? What would you say would be other than looking and familiarizing yourself with it?
Oh, I would say these reports are absolutely necessities because everything you need to know is covered here, and you want to just get to them in depth. So if you're let's say natural gas, right? So you want to know the storage of the United States. You want to know what's happening with the rigs. You want to know the weather, right? I mean, this is like unbelievable for free, really. You want to know LNGs and exports. You want to know imports. So imports with the United States is pretty well with Canada, right? Exports is twofold. It's LNG and to Mexico. You want to know the demand. So the demand is heating, but also and cooling in that time of the year. But it's also industrial demand. For example, something like an aluminium or aluminum smelter uses a ton of natural gas for, things like that. You want to know your nukes. You want to keep an eye on your nuke because that's one of your big energy sources, right? Your renewables. You then want to familiar yourself with technical analysis, where the price levels are. They're very big. Financial futures run a lot of this. You want to know your options and gamma, and you want to know your DCOT. DCOT is the futures positions. You want to know all this. The ICE, right? We got that. And we got... These are all the things you want to familiar with and understand. Not just on this, but on oil. But I would say any commodity you trade, this is just natural gas and this is oil, right? Mm-hmm. So the things that are relevant for oil and natural gas, if you trade corn we looked at that earlier, the soybeans and the corn reports. If you trade those, you saw how violent that was, and then that USAID report today, right? The crop reports. You got to be familiar. You got to know when they come out. If you're an oil or gas trader or investor, that doesn't just mean the future. It means the companies, right, involved in stuff like that. You got to know that every Wednesday, it's EIA or DOE oil report, and every Thursday is the EIA natural gas report. Just little things like that. You got to know when the rigs come out. Rigs really don't mean that much as intraday, other than the overall thing. That's kind of a running joke with oil people. But so same thing here: imports, exports, weather, EIA, the important dates. So like key EIA dates, you want to know when oil futures expire. You want to know when options expire. You want to know holidays. The big thing with oil is it's a domestic currency, commodity, but it's also international. You want to familiar yourself with geopolitics. You want to know what's going on the other producers. You want to know what's going on in Texas versus the rest of America because of politics, right? Texas is more an independent state. It's obviously not a state that goes along with the whole left-wing side of it, that part of the left wing. And then you've got Russia. So why? There's a reason why. It's amazing they did that whole Russia thing that turned out to be a hoax or whatever. But that's a very important country in the situation. They're oil and gas, right? Massive. Then you have Kazakhstan, for example, is oil, but the real thing there is uranium. But we don't talk about that because we don't know whether they're ignorant or not. I don't know. Probably a good chance. But these are real things. And then you've got the other oil. You've got what's going on in the Middle East, and then you've got to know the quality of the barrel. There's different qualities of oil through the world. You want to know what's going on in Saudi Arabia. You want to know with the whole nuclear thing with Iran, right? And natural gas, you want to know Australia. You want to know Indonesia. People probably don't even know Indonesia is a massive producer of it, right? You want to know who your biggest buyers are. India, China, these countries. You want to know Qatar. I mean, so Australia just took over Qatar as the biggest exporter of natural gas in the world, America's about to overtake Australia. That's how big LNG is and important to the United States. And the oil exporting that for America is critical. You're talking about a country here that had a trade deficit of $80 billion last month, and you've got people saying we shouldn't be exporting this, we shouldn't be doing that. Yet they want that same standard of living. If you don't want that same standard of living, and you don't want to pay tax, and you don't want to go to bloody work, then then use your brain, right? But that's not going. That's all the stuff you want to take into account. And the big thing is the uprisings, and unfortunately, the history of oil and gas and most commodities, if it's in somewhere like Africa or Asia, the source, they've really been taken advantage of by the colonial empires, right? So a lot of these countries now, as they're trying to recover from this, are political messes. You know, Nigeria is a real good example of that, right? Sadly. And we know about this particularly in different commodities as well, like copper. You know, and then there's a whole rare earth. I mean, all these things are related. And then the big demand that they never talk about, because they don't want you to get it, is how much oil is being used in COVID, in PPE and stuff like that. Do you ever hear that mentioned?
No, you never hear.
I mean, unbelievable, the news cycle, right? And it's beyond what they call fake news. It's more, no news for you. And so we talk about propaganda. If you look back at Nazi Germany, the whole Nazi war news, the communists in Russia and stuff, we're getting the same stuff. I mean, not in a way, right? I mean,
and Goebbels doing it. Now we just have our
right.
media.
I mean, it sounds outrageous to say that, but it's kind of what goes on. If people just understood, but I'm like, wake up and smell the coffee. What do you learn at school, right? I mean, most things are common sense, man.
News comes from news anchors or these kind of whatever, I don't know what you want to call them, but people on TV that don't know it either. And they're trying to play into the hand all the time and not really telling you the truth or what the real situation is. They're just telling you the surface level, what you need to know, or they just don't even know themselves. Yeah, I mean, we see it all the time with, certain media people talking about different industries and markets, sectors.
Oh, I mean, we made that comment. It's pretty clear that they have people on for either paid or there's some kickback or something going on. But a lot of that, it just seems too obvious. And the other thing is, excuse me, is it so I don't know, you could argue you got a Democrat or Republican or left wing or right wing medias. It's more there's 5 or 6 major media people in the world that are probably telling them what to say, right? And so it's beyond that. And it's always been that. It's well known. Well, it hasn't always been, but it's got more and more. And so if it's pushing an agenda, because it's just common sense, they can't not know it, But people don't seem to want to know it either. That's the other thing, I mean, look, here's our, let's have a look real quickly. There's a good report on the Treasury Committee today about consumer inflation, right? Today's report. So look at this, 7% today. It was the largest increase in consumer inflation since 82, and there's a breakdown of it. But look, so here's the whole thing from the government. Who puts this one out? It's not the BLS, maybe it is. But you can see how high this is. And we can blame, and so here's our 2%, which was our goal. We haven't been under 2% since last February. Think about that. They just start talking about inflation here, your president and people like that. And your media start hyping it up here. Look how far we've come before they even bloody mention it, right? Isn't that unbelievable?
It is.
But we knew it. We talked about it. And here's a breakdown. Look where it came from. This is unadjusted. And this is from the government. This is BLS. This isn't no website trying to push an agenda. This is It's all on Trades Community, so go check it. Look at this. Look where our inflation is. And they don't want to mention this. They just talk inflation and supply chains. Why? It's a lot to do with their policies. Energy commodities up 29%. Look at this. Gasoline up 48%. Fuel oil up 49%.
It's really sad.
41% energy services. Electricity up 10%. Utility gas service 6%. You know why these two are low? Because they're so taxed from before, from like hurricanes in Texas and Florida and Louisiana, basically subsidizing this. You know.
I think what you're doing is, if you try to have a conversation, and we're talking prior to an event or a change, what our life is going to be like, people think you're crazy. They think you're crazy that there's going to be a supply chain shortage, or there's going to be, healthcare increase costs, or if it's going to be something to do with our printing of money that's going to create, some kind of aftermath, and you could say it's going to have a lot of effects, all which have not yet been realized. But you just bring that conversation up, and people think you're crazy until it happens.
Right,
and then
right.
Well, then it happens.
Well, here's a good one on that, which was more back to your point about chips. The other big one, look at this, 37% used cars and trucks. 37%. Now, if I'm a full-on anti-protester, end of the world, Greenpeace, like our friend Greta, then her argument is, this is what you need to stop. Okay, you live in an apartment building, you never drive a car, you don't do this, and you're basically saying, F you, all the people that do, right? Okay? That's your view. And then it's all going to stop people using it. So how are you going to heat your house? How are you going to do that? How are you going to, all your plastic, whatever you use? So they don't think of that. And so from the political agenda, if you just listen to half of what came out of Powell from some of the politicians, they don't want to mention this energy as anything to do with bad policy or anything to do with that sort of stuff, right?
Right.
And the activist, it's just insane. But we're looking here at a table from the US government, and these aren't made up numbers. This is where the inflation is. So looking at these, if I don't eat, doesn't matter. There's no inflation. If I don't drive a car, heat or cool or electricity, there's no inflation. If I don't have a car, there's no inflation, right? Just look at these numbers. A new vehicle's still there. It's insane. And if I don't wear clothes, so what's actually low? Medical care commodities is the only one. And you know why that's down? At 0.4? Only 0.4? Because that's the government totally subsidising it with taxpayer number. Fair enough, COVID. We're not arguing whether that's a bad thing. We're just pointing out that number, look at where these numbers are. Shelter, 4.1%. These are meaningful when you look at this number. You come up here, real weekly earnings, plus 1% versus 0.2%. But look at this. They revised the previous month's real earnings to 0.4%. So that means people go on, and this really grinds my gears, is the entitled arguing that people shouldn't have a decent wage, right? Or get paid for what they're doing. Yet they'll be, politicians or Wall Street, whatever. You are behind the eight ball here right now in the US if you're an average person.
And, people don't understand that they put their money in the bank and it's 7%. They're losing the value of that money. They're having to spend more for all these things that are going up because of what we're talking about. And they're running up credit card debt. They're never going to create wealth, and they're just going to stay where they're at.
Forget wealth. This is surviving. This is survival.
And then it comes to just being able to make your bills and realize that you can't make it.
Right. So that's what happens. And the rich get richer, the poor get the picture, as the great Peter Garrett said many years ago, right? So what they got to be careful for those people that are oblivious, and they all get up and, oh, why are people protesting? Why are people doing this? People get desperate when they can't eat or feed, you know. We do have feral instincts to protect, and you know, our offspring or whatever. I mean, these are all real things, right?
Do you talk about this outside of a format like this? People think you've lost your mind, that it's never going to happen.
Well, it's happening.
Yeah, it's happening, and people need to really tune into what you're spreading as far as be informed. Be informed about all these things that are going to be playing into not just surviving today, but if you are nearing retirement, how's it going to affect that?
Yeah,
or
that's gone, right?
All that stuff plays, part of the quality of your life. And if you just cover your eyes and a bomb goes off, and when you pull your hands away, there's nothing there, it's nobody's fault but your own.
Yeah. That brings me another song, right? Nobody's fault but mine, right?
Yeah.
So we've got to a situation where, look, I think we've all been, we've all been screwed by the best of them, and there's setting a lot of things be under your control, and you try to make your control, take ownership or whatever. But the situation now is you got to be aware what's beyond your control, and not just be blind, and certainly don't trust politician of any persuasion, right? I mean, look at what's gone on and going on. Ask yourself, does this make sense? Does this make sense?
And it's because we've been so spoiled, and we've never been like older countries and places like Estonia, where your ancestry is from. People haven't experienced reality a lot, of having things taken away from them. And
well, I think certain age groups have. It's the last 15 years. I mean, we haven't been through wars 100% like our ancestors, but we have experienced recessions, market bubbles, energy surges, all these sort of things. But we have, and so before you learned to defend or rebuild or whatever, now you get given it all, right? Which is what you're saying, I think.
Well, it's kind of like, when I was a younger man, I got my money into the markets, and it was the wrong time. And in 2001, there was a collapse. Well, I didn't even know what I was doing and lost a ton of money. So it was my fault. And then this time around, I've been really making extra careful steps and learning things, and not just rolling the dice. You've got to really know what you're doing, because I lost almost everything back then. And
yeah, I mean, I could tell some terror stories of people, and we've all been through it. I've had given money to people, and it's just like that thing.
But some people
remember that.
Some people haven't lost everything. They think that it's going to be like the faucet's on forever.
Well, one positive thing is, so everyone thought people like you and I were telling stories, or you're a fool if you weren't just buying. And then we've had this dramatic pullback, right? So a lot of people have lost everything or a good chunk, and they're now realizing. So it will get more mature, and it has been. You saw today, everyone just wanted to sell. Everyone's on. We're barely 100. Here's what's interesting. We're barely 100 handles off the all-time high of the S&P contract, right? If you look, I just looked at the CAC 40 in France, and similar. So it is a measured move in the deeper markets. There is some restraint. But those other ones, it's just like look at you're an ARK investor or some of that, what was that one you mentioned today? Upstart or something. I mean, these things are just, they're decimated, and they're leveraged to do it. And what happens, you get cocky, and these people loaded up, and they bought a lot more than what they should have, instead of staying, even Stevens, and then they just get destroyed on it. And we're all human. We all make mistakes. But what happens when you're not familiar to that, it becomes a gamble rather than an investment or a trade. And that's the big, big difference. And it's like everyone says, this time it's different. It's never bloody different when humans are involved, right?
It's almost predictable. And it's funny because the housing market, you just see people chasing the sheep are just running after the shepherd up to I don't even know where the prices are
It's
going
like
to
the
land.
Pied Piper, really. Rats off a ship, right?
I mean, in California, if you're from somewhere else, you can't buy a home that you'd be proud of unless you spend $1 million. So, $1 million home.
That's a massive investment, man. I mean,
Yeah,
and that's what people don't realize. A home is the biggest investment most people ever make.
But it's the same behavior when you're chasing green candles. The majority of people buy it at the top or near the top, and then they sell it when it's at the low. You know what I'm saying? It's almost just human nature, and you got to learn how to disconnect yourself from that.
Yeah,
And that's
yeah.
a real hard.
People get emotional, they get greedy, they worry about the Joneses, and that's another part of it. So really, we're going to morph into more as I get more familiar with this format, more into psychology and mental health, and we're going to have lots of different interviews I got with friends around the world, from the sporting world and entertainment world, because that is really the most important thing. 85% of trading and investing is mental. And what you're talking about is mental right there with housing and stuff too. And that's critical. And critical. I'm fortunate to speak from that space and also through some of my personal experiences may shock a few people. But it's how to, and we've all been through that. But you need to realize or understand it's all okay or normal. And that's never talked about either. It's just... And this game is, and trading and investing, it's not life or death. It's not a soldier, you're not a doctor, so you're not that kind of important. So don't ever think that. But what it can be, because it becomes so stressful and highly strung, people make decisions that can really affect them emotionally and mentally. I've seen more fortunately, I haven't known many people with suicide. I've read about it, obviously. But I've seen so many drinking problems, broken up marriages, all these sort of things, or broken up friendships. Because it just brings out this intense stress. And it makes you do wrong things. Like all those people buying all those stocks, right? You couldn't tell them, mate. And you're right, they're right. And the scary thing, when markets revert up or down in a violent fashion, it's very fast and very brutal, and it goes to where the most pain is. When I trade, I always look for where the most pain is. I say that too, right, Johnny?
Mm-hmm.
And that's the way it is, I'm not being a mongrel by saying that. That's the way it is, right?
Save yourself from yourself.
Huh?
So sometimes you have to save yourself from yourself.
Right. So that's exactly why I use technical analysis. And it's all about giving you rules, giving you discipline, telling you when something's too overbought, too oversold. And if you miss it, it's always better to get out early than late. And there's so many little simple things, but you're fighting with yourself is the point. It's a constant battle with yourself. I mean, that's life, right? But we're talking about trading here. I mean...
No, I'm guilty of holding positions that I should have lost a long time ago. Would have been better than a loss that I would take today. And over time, companies can get worse and worse, more than they can get better and better.
Right. Well, I mean, the economic hypothesis is that everyone has information at the same time and makes intelligent decisions. Well, that's not really the case because people react, but the information is all out there by the time it gets up to the top or bottom. That's true. And people laugh at me when I say, I asked, do they make money? Right? Alex always laughs at me, do they make... That's a massive, important thing. And you know what? If you miss out on stuff, it doesn't matter. If you're trading to be excited, you're gambling. It's that simple, right? But anyway, we've been talking for quite a while here. I hate to look at how long. But really good topics, and we did morph into some really good topics there. Thank you. Really good insight there on semiconductors. You were at that coalface for a long time back in the day. So you know that better than most, Johnny. And Madawi on some of your stuff today. But hopefully everyone got something out of that with oil and gas. What else we talking about? Bitcoin, semiconductors. We solved the world's problems, right? While we're at it. But seriously, have a good sleep, everyone. Rest. We got tomorrow, we got PPI, which is Producer Price Index. It should be more important, some would say, than the Consumer Price Index at predicting what's coming down the track. But lately it hasn't been. It's more a question of whether the producer's going to pass on the consumer. We have natural gas report tomorrow, inventory report. That's going to be particularly interested when we're trading up here. And we have the mortgage applications out again tomorrow. That's pretty well it, right? Yep. So good luck, everyone. Sleep well. Enjoy. Thanks for joining us. So make sure you follow us on socials. Traders.com, Meta Johnny, Madavi 4. Make sure you like. It really does make a difference. Like and subscribe. And you will get... We try to put out a lot. We just been crazy busy, but more like I noticed we got a lot of comments back on the JP Morgan one we did on charts, more individual, not 2-hour discussions for you. So any feedback, just shoot it our way. Have a great night, everyone. Bye now.
Bye-bye.